Harendra Kumar joining in this morning to chat with us. He's MD at Elara Securities. Harendra, great to have you on NDTV Profit and India Market Open. Pleasure to speak with you. Since, since we're talking about the primary markets and everything happening there, let me start with your commentary on what you're saying. And also, we'll come to the valuations and all of that. But the different kind of companies that are now listing and beginning to reflect what's happening in the real economy and giving that opportunity to investors as well.
Yeah, of course. So the character of India's GDP is, of course, changing. That is reflected in the type of IPOs that we are seeing. But a caveat here is, what we've seen is this entrepreneurial journey of all these companies began probably in 2014-15. And they are reaching a fruition probably 10 years down the line, which is today. And the question that investors have to ask is whether the same hunger for this entrepreneurs exists to create value in future. Right. So today's market cap presents the value created in the past. And obviously it's capturing the value for the next 10 years as well. So investors have to be very discerning when they enter an IPO is how much of the future is captured in today's price. So people who entered earlier, it's a great moment to exit. But people who entered today, I think the question is still out in the open whether the companies can deliver on what equity that they've raised from the markets today.
Harendra, good morning. Neeraj here. And I echo Tamanna's sentiment. Good talking to you after a while. But would this be true for everything under the sun, or are there exceptions to the rule? And part two of my question is, are there more exceptions, or do you find very few companies which will actually deliver returns for shareholders at the current valuations at which the money is being raised?
I think there are 2-3 aspects here. One is typically you will see that the new IPOs have 2-3 promoters, right? So the hunger of these entrepreneurs is generally you will see after IPO some encashment. There is a split in the founder list, and you have only one founder continuing the journey. So the magic of 3 founders working vis-a-vis one, and the pressure to deliver on the outcomes is very, very high. I think that is something that investors have to look in is how the journey of the entrepreneurs is going to be. Second, of course, is the type of capital has changed from a private equity investor who is probably working with the founder to create value is probably encashing, and there are future dilution that will come, which is replaced by a mutual fund insurance company that has very different return dynamic expectations from investors. So the character of the investors also changed, put a lot of pressure on businesses to deliver quarterly earnings. So this changes the dynamic of the way the business is run. So, the future can only get established after possibly a few quarters. So I think that is one very, very important point when you assess a new gen IPO or a founder-led IPO. And of course, when the bankers price the transaction, they want to price it to perfection, which is probably looking into the next 10, 20 years. So which places a very heavy burden on the entrepreneur on the execution side. So typically you will see that the companies start to flounder on the execution because the ask rate is very, very high. And generally, while the overall TAM, the opportunity size is very good, the management's ability to execute comes as a challenge. They eventually figure it out, but the risk that they might flounder in the ensuing quarters on the expectation that they have built is very, very high. So wherein lies the risk when you enter a new gen IPO.
Okay, so that's of course the IPO story, but having said that, the breadth of the market is now so wide that the question for investors, and one of the reasons why IPOs have that sheen, is because you're looking for newer opportunities. Do you think that there are missed opportunities still there in the markets when you look at valuations and in light of what the corporate earnings have been like in this quarter?
Absolutely. I think, I don't know whether the market has caught on to this story we did write in a preview and which is playing out, is that the earnings trajectory from single digit is moving towards double digit. And as of now, as we speak, 240 companies under coverage have released numbers, and the profit is holding up really well. We are in mid-teens now, which is a very, very encouraging sign. And I was sitting with my team yesterday. So if you look at the ensuing 2 years, I think we'll end this year with 13.5%, 14%, and which will go up to 15%. So this is a very good trend, and you will see a broadening of the earnings as well. So while you will see the large caps also doing well, you'll see the mid cap and small caps also coming to the party. So while the whole, the focus of the market is on the new issuances, I think the broader market rebounding also is giving you a lot of opportunity to create additional alpha.
Okay. Okay, Harendra, now the near consensus amongst all of the sell side post quarter two is that we are poised for upsides because of variety of factors, but earnings being a necessary component of those factors as well. To your mind, out of the two or three, and I know all of them have to fall in place for a sustained rally, but is earnings the most important leg, or do you reckon a trade deal would supersede earnings as possibly the more important factor for a potential rally over the course of the next 3 to 6 months?
I think it is the earnings. So we've put out numbers. The biggest bugbear for India is that the nominal GDP growth has been very, very tepid, which is playing into our flows as well. So the growth differential between us, other EMs, and the developed world actually had narrowed. So we were clearly not an attractive market. Now, this will turn only if the earnings starts to move up. So we are seeing the nominal GDP uptick beginning from this quarter to all the ensuing quarters, which will play up in the broader earnings growth as well. So I think that is the primary one big lever. Second is of course the FI flows, which is also dependent on nominal GDP growth. Now here I would like to add a point that the India's rear is now in the oversold territory. So India becomes a very attractive with respect to earnings growth, reasonable valuation, and a flow trajectory that is looking to go up from here on. So I think starting from earnings, everything else is reflexivity. I think it will fall in place and the market should rebound. But yes, this trifecta of variables has to come in together.
Okay. Where within, I mean, as a house, where within the H1 or Q2 did you guys, or were you guys the most impressed by earnings? Because you might have had some estimates, some sectors might have done well but failed to beat your estimates. So where is it that you guys were most constructive post earnings, as you said in that report that you published?
Yeah, so the bigger part was of course consumer discretionary was a consensus trade, but I think the autos pack is something where we are seeing continuous growth. The OMCs, oil marketing companies, is something where the surprise came. On the consumer discretionary, you had hotels and some turnaround plays that came up. So broadly, I think most of the large cap names are delivering, be it a Nykaa. So the consumer discretionary story, I think, has surprised positively for the markets.
Okay. Just last point, Harendra, if you had to look at one sector, and I know you're not going to talk about any stocks, so I'm asking about one sector, which you think is, going to give you alpha and hasn't been spotted in that sense yet, what would you say?
So not that it's not been spotted, but I think financials, which has underdelivered, is a very classic play is with the return of the FI story. Typically, it is the financials that leads the rally. We are also talking about large cap private banks valuation converging to some of the larger PSU banks. I think herein also lies an opportunity. A lot of value fund managers are looking at large cap private banks now. But that's on the index weight where you can get your incremental alpha. But if you ask me, I think the large story that people typically believe to be utilities is a growth story is the power sector. I think underlying India's manufacturing shift and growth will be the reform process that will trigger off the power sector's growth. I think we're going to enter a next leg of growth on the power sector.
Okay, thank you so much. Harendra Kumar there speaking with us this morning of Elara Securities.